What if I told you that you don't need to be a financial expert to build wealth in the stock and the money market, and that the secret isn't hype or guessing? It is patience, it is value, it is time, and it is consistency. Are you ready to take control of your financial future and build the world you truly desire? In the next few minutes, right, we will dive deep into the world of stocks and ETFs, two of the most powerful tools for financial wealth building in today's world. If you have ever felt overwhelmed by financial jargon or wondered where to even begin, we are breaking it down today in a simple, actionable steps. And by the end of this video, right, you will not only understand the basics of stocks and ETFs, but you would have a clear strategy on how to start building wealth like a pro. Hello everyone, my name is Ediya Francis Kwame and welcome to Ediya Pill. As we dive into the 7 holistic aspects of living, today we are diving very deep into clear strategies into the money market. Let's face it, most people are working hard to get by, but few actually understand building wealth for the future. Stocks and ETFs can change that for you. Most people are working hard, but few get what it actually means to build wealth for the future. Stocks and ETFs can change that for you. Stick with me as we explore why investing in stocks and ETFs are one of the most powerful keys to financial independence, and how patience, how time, how consistency, how compounding are true accelerators to wealth. Before we dive into the strategies, right, let's talk about why this is so important. If you are just working 9-to-5 job or relying on a single source of income or single stream, you might feel stuck. It will never allow you to live the life you truly desire to live. You are trading your time for money, right? And that is not scalable because we all have 24 hours in a day. You cannot make more than that 24 hours if you are trading your time for money. But what if I told you that there is a way to make your money work for you instead of you working for the money? That's where stocks and ETFs comes in. Yes, financial literacy isn't just about knowing how to budget or how to make money. No, it is about understanding the vehicles that can make your money grow, that can make your money make money for you. And that is why stocks and ETFs are one of the most accessible wealth vehicles if you are willing to put in the work. Stocks and ETFs are one of the most powerful tools available to everyone, but most people never use them because no one ever showed them how to use it. That is why we are doing this today. I'm going to start this from a beginner friendly level, right? I assume you have no knowledge about stocks, so let's break this down, right? A stock represents a share of a ownership of a company, right? When you buy a stock, you are buying a tiny piece of that company. The value of the stock goes up or down based on how the company performs, right? Imagine this. I am 100% owner of Ediya Pill, and Ediya Pill goes public. I want to sell part of Ediya Pill. I will send it to the stock market, right? And then I will say, let's say I want to hold 50% of Ediya Pill, right? So I'm selling 50% of it. But when I come to you that the 50% cost maybe $100 million, you don't have that amount, but you also want part ownership. So I'm going to break down that 50% into tiny pieces called shares, and that shares contains stocks. So if I sell to you one stock for like maybe €14 or €10, that is a percentage ownership. That is what stocks means. You are an owner of a tiny piece of a company. So the more stocks you buy, the more ownership you get. Imagine if you buy a stock in a company like Apple. Over time, as Apple grows, it introduces new products, it makes more money, right? The value of your stock could also rise, meaning that your initial investment grows. But if the company performs poorly, your stock value might also fall. Stocks are good for long-term wealth building. If you try to chase quick profit, you will likely get burned. But if you hold onto your stocks and let them grow over time, you are tapping into the power of compound growth. Yes, more than just in a short period of time. One thing that I want to stress is never invest more than you are willing to lose, because the stock market is a volatile market. But if you are patient, right, stocks and ETFs would reward you. And keep in mind, this is not a financial platform, so before you decide to do anything with your money, please kindly do your due diligence and have more information about it. Let's talk about ETFs, a game changer for anyone looking to diversify their portfolio without completely picking individual stock. An ETF is essentially a basket of different groups of companies, right, that are bounded together. When you buy an ETF, you are investing in an entire sector or a group of companies instead of just one. So in the previous example that I did about Ediya Pill is just maybe one company. But when I buy an ETF can hold like 1,000 different companies, 2,000 different companies, some global, some national, some also diversified in different sectors like health, finance, right? It's a group of companies. So let's say the magic in ETF is more about diversification. So instead of putting all your money into a stock, which could be very risky, right, you are spreading it across multiple companies. So if one stock performs poorly in that bundle of ETFs, the others may help to offset that losses. This reduces your risk. So let's say that I buy an ETF which tracks maybe a technology sector, a health sector. Instead of owning individual stocks like maybe Apple, like Microsoft or Google, you own shares in all of that ETF, right? So even if one of those companies drop in value, you still have the other companies balancing out. Diversified ETF contains like 1,000 companies, right? And one of the ETF costs like maybe 100 euros. Inside that company, there are percentages. So maybe it could have Apple, it could have Amazon, it could have Google, it would have Tesla. Inside that, you buy pieces of those stocks which are combined, bundled together as the ETF. So you are buying pieces of Apple, Tesla, Amazon, of Nvidia, those globally diversified portfolios, and most of them, they are not in one country. When you take an ETF like maybe the Vanguard S&P 500, right, it contains 500 of the biggest technological companies in the United States. So this is a national ETF, but it is diversified in the sense that it is not only about one company, it's a different group of companies. Let's say you take the iShares, the MIC World, it's a globally diversified ETF, right? So you can have maybe companies in Japan, companies in the United States, companies in the European Union, companies in Southern America, in Asia. These are more worldly, globally diversified ETFs. To get started in investing in ETFs and stocks, you need to open a brokerage account, right? Platforms like maybe Fidelity, like Vanguard, these are all beginner friendly apps like Bamboo, like Trove, like Robin, like Trade Republic, Scalable. These are great places to begin. The next step is to start small and be consistent, right? If you are a beginner, start with an amount of money you are comfortable with. Think of it as a tuition for your financial education. But over time, as you become more comfortable, you can start to invest in larger amounts. Don't wait till you have big money. You can start investing 10 euros, 20 euros per week, per month, right? You need to start small and you need to be consistent, because consistency wins in investment over time. One of the most powerful tactics of building wealth, right, is dollar cost averaging. So this is where you have to invest like a fixed amount of money over time into ETFs or into stocks at regular intervals, and regardless of the market issues, whether it is up or it is down. This strategy smooths out the volatility and ensures that your investment is consistent over time, right? Let's be clear with this. Investment isn't gambling. Ediya Pill has a video link about financial intelligence. I will link it up to this video where we dive into ways not to make money, where we said we don't make money by gambling. Investment is not gambling. In gambling, it is only the companies that make the money. We program gambling codes, and these are cheat codes. So before we say a company would give out 1 million euro or $1 million to a group of individuals, that company had made more than like 40 million before. So eventually one or two people will win, but the money is made by the companies, and investment is ownership. It is not gambling. So you have to be patient and you have to let time and compounding do the heavy lifting. Now that you have the foundational knowledge, we are going to go on an intermediate level, right? You need to learn to read and research, right? You start learning how to analyze stocks. You read into financial metrics like price to earning ratios, like earning per share, like dividend yields, right? Because many stocks and ETFs pay dividends. Yes, dividends is amounts that company pays to their owners at the end of the year, which are essentially a share of the company's profits. So instead of cashing them out, you can also reinvest them. And most of the times when choosing the brokerage account, choose accumulating, so that especially if you are in a very high tax environment, these are tax advantage because they are accumulated over time. Because this strategy can be a snowball in return. Build a diversified portfolio if you are a low risk person. Yes, because if you understand the stock market, choosing one stock which can scale higher can give you a higher return and a higher growth potential. But if you are a low risk person, you have to diversify your portfolio. You don't throw all your money into one stock. No, you diversify. Maybe you buy 50% of an index fund, you buy 30% into dividend stocks, 20% into maybe a growth stock, some thematic stocks. You can invest in ETFs in that way. This way you reduce the risk while growing wealth across different industries, platforms, and sometimes across different geographical locations. The sixth step is to automate and be consistent, right? You set and you forget. You use auto invest tools so your money works while you sleep. Wealth doesn't build overnight. Wealth building takes time, and neither does a solid stock portfolio. Think of your investments as a seed. They need time to grow. Patience in this is your best friend here. So you stay focused on a long-term game, long-term wealth. Look at Warren Buffett, right? He is one of the wealthiest people in the world, and his secret is patience. He is known for buying stocks he believes will perform well over decades, not just over months or over weeks. The seventh step here is to understand the power of compounding. Yes, Albert Einstein said compounding is the eighth wonder of the world. Here is where the magic happens. Compounding is when the money you make also make money over time. The return on your investment also earns interest, and that interest also starts to earn its own interest. This process accelerates your wealth building. So let's say I invest 5,000 euros into a stock that averages, let's say, 7% return annually. After 1 year, I get 5,350 euros. But the next year, you don't just earn 7% on the 5,000 euros I initially invested. You earn on the 5,350, and that cycle continues. So over time, compounding can turn a small amount into a very large amount. The trick here is that you need to start early and be consistent. The earlier you start, the more compounding works in your favor. Even small amounts invested early can grow significantly over time. Let's say Jane is 20 years and starts investing 100 euros per month. John starts to invest at 30 and starts investing 200 euros per month. At 60 years, right, Jane gets more money even though she invested less. Time beats timing. So you need to start early and you stay in, be consistent. The 9th step here is that you don't panic. Stay consistent. Yes, the biggest barrier for most people is impatience. When the market dips, the temptation to panic sell. But remember, yes, this is a long-term game. The market will have ups and downs. But if you are investing in a solid stock and ETF, you will come out ahead. Wealth comes from patience. So the real question is, are you willing to take a patient, disciplined approach to building wealth? If yes, you are on the right track. The goal here is that you buy at a lower price and then you sell at a higher price. So if the market is up, don't panic sell. No. If the stock is down, if you don't sell it, you still have your stock intact. But once you sell it at the down price, that is when you make losses. So don't panic sell. The 10th step here is to reinvest and review quarterly, right? Many stocks and ETF pay in dividends, as I initially said, which are essentially a share of the company's profit. So instead of cashing those dividends out, you have to reinvest them. This strategy can snowball your returns, especially when it is compounded over several years. You have to review your portfolio every 3 months. You adjust slowly and smartly, right? You can use tools like Excel sheets, apps like Personal Capital or Google Sheets. Sometimes platforms like Trade Republic, Scalable also offers you this opportunity. One thing you need to understand is that after you build your 3 to 6 months emergency fund, every money you get must go into investment. Every money saved in a bank account, it's not going to catch up with inflation because money reduces, it depreciates over time. With time, money reduces in its buying power. So you need to invest your money into a high yielding investment, right? Into stocks, into ETFs. You need to make your search before you invest in that. Yes, for me, I believe real estate is a vehicle that does not only allow you to just make wealth. No, it also allows and preserve wealth. So if you can't start in real estate, of course we have real estate ETFs like crowd-funded portfolios. You understand? REIT, real estate investment trust, where you can buy part ownership of a real estate property. You can also go into that. Over time, tech companies are doing very well, financial companies, and also companies that are into essentials like food, like clothing, like daily things we need. These stocks and ETFs also do well over time, right? So here is the roadmap to stock and ETF success. Let's recap into them. You need to learn the basics. The second was to open a brokerage account. The third is to start small and be consistent. The fourth is to diversify. The fifth was to automate. The sixth is to understand compounding. The seventh is to be patient, and the eighth was to reinvest and you adjust your portfolio. You don't need a finance degree to build wealth. You need vision. you need consistency, and you need the courage to start small, right? You don't have to get everything figured out before you start. No, you start first by investing into something that is ongoing. Now that you know the basics of stocks and ETFs, it is time to take action. Start with small investments. Learn as you go. You act your way to clarity. And as I said, you start investing with money you are willing to lose. And remember that the key to building wealth is consistency. The power is in your hands to create the life and financial freedom you truly need to live fulfilled. If you found this video helpful, please make sure to subscribe and hit the notification bell for more financial strategies. And let me know in the comment section what one strategy and action you are going to start from today to start building wealth. Remember, it is not about timing the market. No, it is about time in the market. Stick with it and you will see the results, right? Build wisely, live fully, and see you in our next episode. As usual, I am Ediya Francis Kwame, and this is Ediya Pill, where we don't just grow, we transform and we live fulfilled. Embrace the holistic journey and let's create the life our future self will be thankful and proud of. Ediya Pill, your dosage to holistic living. Thank you very much for watching. Bye.